For more on Boeing's struggles, as well as the potential beneficiaries, let's bring in Jefferies Sheila Kahyaoglu. She reiterated Boeing with a buy rating on Friday, has a $270 price target on the stock. Sheila, we brought you on to talk about one stock in particular in your space, which you recently assumed coverage of, FTAI Aviation, FTAI. But I wanted to ask first your take on Boeing and why you're standing by Boeing at this point.
I think it's been a long, dark night for them. And there's no kitchen sink yet, right? We have this labor issue. We're assuming about 1.3 billion of cash flow usage every month that goes on, although I don't think it'll last till year end. I know I've been dead wrong, and Phil's on the floor talking to those folks, but I do think at 6 weeks they break even on even a 40% wage increase. So it's somewhere between now and the next 6 weeks, but you do hit a cash conservation point. Because you are hemorrhaging cash of 1.3 billion, and you're using 3 billion of cash to start with. So you're sub that 10 billion floor, and that's why the rating agencies put it on a watch. But hopefully it gets resolved quickly. In the meantime, the aftermarket names are benefiting. And the way we think about that is every 100 planes that Boeing misses, it's about 5% top line upside to these aftermarket names.
Every 100 planes that Boeing misses, what does that mean?
So in the global fleet of 25,000 aircraft, we assume Boeing and Airbus essentially deliver 1,500 aircraft per year. We've cut our estimates several times, about 200 aircraft out of Boeing. So that's added 10% upside to aftermarket estimates. So the names that are benefiting most from that are General Electric, who saw that chart, clearly benefiting, TransDigm. Two other names that have over 50% exposure to the aftermarket are HEICO and FTAI. FTAI is a name we just launched coverage on. It's done really, really well. The best part about FTAI is it only has 9% share in the engine market. And so we assume that every 1 point of share is $10 of upside to the stock that's sitting at about $120 right now, and our upside doesn't embed that in yet. So FTAI is primarily exposed to GE's older engines, which is the CFM56. That's powering about 55% of the global fleet.
So in terms of the FTAI model, Sheila, I was sort of reading through the transcript that you did with the fireside chat with the chairman and CEO, and he mentioned a sort of a flat fee, sort of maintenance reserve, and so the sales pitch would be, outsource your maintenance to us. It's going to cost you this much money only, like that's your baseline, and you know any engine that needs to be repaired, we'll just simply swap it out. You won't lose any time.
Yeah, think of an engine as, let's say, very modular, which is Joe's pitch at FTAI, and it's 3 pieces. And essentially, they could fix the engine within 30 days instead of a long-term service agreement that may take anywhere from 120 to 180 days. So when airlines have profit margins of 3 to 10%, you want to have that quicker turnaround. And what FTAI does is says, I'm not going to service 55% of the global fleet. I'm going to even cut that market share into different slices. And I think my addressable market is only about a quarter of that, because it's targeting airlines off long-term agreements. That means airlines that are engines that are older than 10 years old. And then it's even slicing those airlines up. It's saying, I know I'm probably not going to win business with Delta because it does its own maintenance, but I could probably go after LATAM and other airlines like WestJet that are addressable to me. So we assume that they go from 4% share today to 9% by 2026. And then every 1 point of share is essentially $10 to the stock's price, because it's doing it faster and cheaper than the engine OEMs.
Sheila, real quick, you initiated FTAI, I think, June 25th, buy rating, $120 price target. I think the stock was trading 90. This move, I mean, this is a parabolic move in a very short period of time. Does it concern you at all, or is this thing just going to continue lower left, upper right?
The best part of it is it's all been EPS revisions, 0 multiple upside. So the multiple upside's yet to come. I mean, I know it's an expensive stock, but we've seen these things move up. So it's been estimate revisions in the right direction, 45% in the last 3 months, which is quite phenomenal.